Many of the big thinkers, Addison, I suspect our president among them, don't realize that 1 billion people on Earth have no access to electricity. 2 billion people on Earth have access to only intermittent or unaffordable electricity. And those people want to live materially the way that you and I do. Is there a future in alternative energies? Absolutely. All forms of energy.
It's the Wiggin Sessions. I'm Addison Wiggin. I'm your host. I have with me Rick Rule, an old friend of mine. We co-hosted a conference in Vancouver for 10 years back in the aughts, in the early part of the 2000s. And then after I bowed out, Rick continued the conference, and the next one is on July 23rd in Boca Raton. We're going to talk about that in just a second. But let me formally introduce Mr. Rule. He's a 40-year veteran of natural resources and precious metals investing and speculation. He's the founder of and former CEO of Sprott U.S. Holdings. He is the current CEO of Rule Investment Media and the co-founder of Battle Bank, which I think is kind of exciting. So why don't we get started first? Rick, let me welcome you to the Wiggin Sessions.
Well, Addison, I'm delighted. Thank you for inviting me, and I look forward to a session. Sounds like it's going to be a lot of fun.
Yeah. So why don't we begin by, I want to unpack some things because you and I are just catching up after a spite of time where we didn't actually speak to one another. Everyone's busy. Let's unpack first Sprott USA or Sprott US, and then Rule Investment Media, and then Battle Bank. That sounds interesting. So why don't you lead me through all of that?
If we go way back to when you and I spent a lot of time together, I owned a financial services business, and I sold that business in various parts to a listed Canadian company called Sprott Inc. And my business became their U.S. business, Sprott U.S. Holdings, now a $25 billion asset manager domiciled in Canada, listed on the New York Stock Exchange under the symbol SII. At some point in time, I think age 69 or something, I decided that I'd had enough of regulated activities and that I was going to retire, as it were, at least retire from reporting to the SEC and FINRA. And I've done that. I've given up my executive roles at Sprott, and as of a couple days ago, I've retired from the board of directors at Sprott, although I do remain the largest shareholder, and I suspect the largest private client of Sprott. I haven't retired in the sense that many people retire. I get strength from work as opposed to giving strength at work. But I've given up, for the most part, any activity which requires too much by way of administration, supervision, or regulation. I've finally learned the lesson from Addison Wiggin that you employ yourself in businesses where your relationship is with the client, as opposed to businesses where your relationship with your client is subject to the whims of the legislature.
Yeah, well, we've had our issues with that as well. So that's Sprott. Let's talk about Rule Investment Media. That's new to me too. That sounds like a new venture for you.
Yeah, Rule Investment Media actually grew out of the symposium that you started. I became more and more interested in investor education, and as a consequence of that, began to dabble in social media because I didn't know very much about the business and I wanted to learn it cheaply. And that grew into a subscriber list. I say subscriber in the sense that they've double opted in, but they don't pay me anything, of about 70,000 people who I communicate regularly with. And I present as freeware some investor education products, some of which we'll describe later, but also the Rule Classroom, which is an online series that's absolutely free. It has 11 chapters so far. It will end up with 60 chapters telling people how to invest in natural resources and precious metals. I used to be asked to write books all the time, and I refused. This series will be, in effect, my book, because I think people learn better from video than they do from reading. And so that's free. But we have a couple paid products too. We have every 3 months an online boot camp where we take one aspect of natural resource investing. We've done uranium, we've done silver, and we just did electric and battery metals. And we spend 8.5 hours on that topic with a variety of industry experts. This is not light viewing. You don't go to this as a substitute for entertainment. You do it because you're deeply interested in some aspect of natural resource investing, and you have or intend to have an amount of money that's significant to you in the sector, and you want the best information that you can around the sector. These are virtual conferences. They've been watched by people in 33 countries. They've been extremely well received by the people who have watched them. All of the paid for investment products sponsored by Rule Investment Media come with an ironclad money back guarantee. If you didn't think that the content was worth what you paid to receive it, you get a 100% refund, no questions asked. And in 3 decades of offering up that value proposition, I've had to pay back less than 0.1% of the tuitions that I've raised. So I know we're doing a fairly good job. And then, of course, the granddaddy, which is the symposium that you speak of in Boca Raton, Florida, coming up. These live symposiums really are an outgrowth of the symposium that you did with a very similar format. First of all, have paradigm, speakers with a worldview, your old friend Bill Bonner, Jim Rickards, Doug Casey, Grant Williams, these type of people, Nomi Prims, people with an amazing view of the world, but not the view that you would see on NBC or CBS. Yeah. But we go farther because we're in the resource business. We have analysts and portfolio managers with 30-year reputations in the mining business. And the feature that I like the most, we have the living legends, which are entrepreneurs who have built multi-billion-dollar mining companies from scratch, telling you the lessons that they learned, what they did right, what they did wrong, and how those lessons can make you a better investor. At our conference, like at your conference in the old days, every exhibitor has been vetted. We have to own the exhibitors in our own accounts as conference sponsors. There's no guarantee, sadly, that every stock Rick Rule buys goes up, but there is a guarantee that we know the exhibitors well enough that we have invested our own time and treasure in them. And all of that comes with an ironclad money-back guarantee. If you attend the conference in person, that's great. You'll be there. If you don't want to attend it in person, we will live stream the conference. You can watch it from the comfort of your own home. In either case, you will have the conference available to you by replay for 6 months. I think it's impossible. I've proven it's impossible to get all of the information available in 48 hours of programming in the 4 days of the conference. Having access to the information at the conference for 6 months adds an awful lot of value to the conference. So that's what Rule Investment Media is. Partly free, partly paid, investor education and information around natural resources and now conventional financial services.
I want to get on to Battle Bank too, because that sounds pretty fun. But I do want to point out, since we're catching up a little bit, that the model that I have for the Wiggin Sessions, the show that we're on right now,
yes,
is derived from the content that we put on live in Vancouver for 10 years. Like a variety of different viewpoints, looking at different sectors. Some people smart, some people not so smart, political to the technical. Like we did a lot of things back then that I really enjoyed doing. And as we were talking before we got online here, it sounded like you enjoyed that experience as well. And that's the spirit that I wanted to generate here in the Wiggin Sessions.
I applaud you for that. I frankly, in many senses, enjoyed speaking at your conference more than I enjoyed putting the conference at all on, because all of the background around putting on a conference is terrible drudgery, and the intellectual part of it is what is fun. You'll recall when economic circumstances caused Agora to abandon that conference, I took it up unwillingly. I took it up because my customers at the time said an important part of the value of their relationship with us was that conference. And if your best customers tell you have to do something, you do it. Since it's become a bit of a labor of love, I've really come to enjoy it. And I'm thankful, frankly, for the wonderful format that you all put together, as you suggest, no control of the point of view, differing points of view,
battling points of view.
Yeah, absolutely. And I think that's a function of intellectual honesty. I think if you're getting one narrative, you're being sold. You're not being informed. And so we fought against that. Now, we have one subject, which is to say natural resources, because it's the only subject that I believe I know deeply enough, with the possible exception of conventional financial services, that I have very much to teach. We don't try to teach technology. We don't get into pot stocks or psilocybin, at least formally. We do natural resources and precious metals because that is where my group of contacts has enough information that they can deliver a product of value.
Yeah, so it's interesting to me to watch. I actually I was surprised. I don't know why I was surprised, but I was surprised to see that it's the 9th year for the Rule, what I call the Rule Investment Conference.
I don't think that's right. If I recall, we took it over from you guys in 2002.
No, because I ran it to 2014.
Okay, well, in that case, it absolutely is. Yeah, we didn't have we did have a down year during COVID when we didn't have the ability to do it virtually.
Yeah,
and the law precluded us from doing it physically. But
you might think that it was 2002 because I had you on stage like day and night for 10 years.
It was always a pleasure. Believe me, it was always a pleasure.
Good group of people showed up too.
I remember I made the mistake of allowing you to cast me after Bill Bonner.
Yeah.
That was a terrible mistake, one that I never forgave you for. But I think the audience got their money's worth. Always. That's the ultimate test of the conferences that we did together.
Yeah. All right. So we're going to talk a little bit more about the conference because I want people to attend. And you talk about your education course as your version of a book. I'm going to use this as a chance to do a shameless plug. This book just came out this week. And this is the 3rd edition of Demise of the Dollar, which I wrote while we were working together. And so now we're in our 3rd edition. This one pulls us forward through the bailouts to the pandemic and beyond. Like we make some forecasts and stuff like that too. So I want it to be featured at your conference.
I look forward to inducing you to do a book signing.
I'll do it. Let's talk about what's going on these days because there's. Oh, wait. I want to hear about Battle Bank.
Well, Battle Bank is great. Going back to our first incarnation together, beginning in 1998, I backed a group of veteran bankers to establish one of the world's first online banks. That was called Everbank.
Right, exactly. Yep.
There were a few of us, but me in particular, who were disgusted with their relationship with their existing bank and the value proposition of a branch, and decided that there was a place for a specialized bank where your computer or your phone was the branch and where the non-interest expense that you normally endure in a bank could be passed back to the depositor by way of higher rates. And Everbank turned out to be a spectacular success. You'll recall that they introduced the concept of foreign currency CDs to Americans. They allowed people to save in instruments other than US dollars, foreign currencies, gold, a whole bunch of stuff. And the novel concept that the money belonged to the depositors is really what propelled Everbank. At one point in time, the foreign currency CDs accounted for $8 billion in AUM from a standing start. Over 14 years, that bank, by focusing on the customer, grew from 0 to $28 billion in AUM, went public on the New York Stock Exchange, and ultimately was sold to a large institutional buyer, TIAA CREF, who wanted the platform, I think, more than anything else. TIAA has done a good job with that bank servicing their members, but the truth was that the innovative marketing and product offerings from Everbank were of less use to TIAA CREF than they were to some of the depositors. The consequence of that is that deposit base basically started emailing us 5 years ago and said, our bank has left us. Will you go again? The answer to that is yes. We are starting a new bank called Battle Bank. I can't imagine a better time to start a bank than right now with all the turmoil in banking. The turmoil's so bad.
You have the right terms, right?
It's fantastic. I mean, over $1 trillion has gone from interest-bearing deposits at regional banks to non-interest-bearing deposits at the big banks. Who in their right mind would have a non-interest-bearing deposit? Why would you take the risk? Why would you defer consumption for no interest? So the idea to start a sanity-based bank, which is really what Battle Bank is all about, is just absolutely fantastic. What'll be things that set apart Battle Bank? Well, first of all, blocking and tackling. This is a bank that's run by old, including myself, bankers. The idea that we'll be engaged in a great big mismatch between the maturity of our deposit base and the maturity of our assets is very low. That brought down the U.S. savings and loan industry. Then it brought down Silicon Valley Bank. Then it brought down First Republic Bank. Yeah, we're not going to do that. We're not going to do that. And we're not going to try and be all things to all people. Addison, I will freely concede to you that I can't compete with Bank of America, but I will offer up that Bank of America can't compete with me either, because I'll do things that they won't do. I will offer foreign currency CDs, which they don't do. We won't have 14 savings products. We'll have one savings product, a high yield cash account that you could write checks against if you want, or not. Not 14 products, one deposit that will always be in the top quartile of interest payments of all depository institutions in the United States. And we won't make a bunch of goofy loans to goofy industries that we can't spell or can't pronounce. One feature that we'll have at Battle Bank that I suspect that your audience will like is that we'll make loans against physical gold and silver portfolios held in segregated accounts. Right now, the banking industry, for some reason, doesn't believe that gold is good collateral. It's highly liquid, it holds its value, and we will be making gold loans to people who hold their gold at places like Brinks, Viamat, and Loomis in good delivery form. You can rest assured as a depositor that your money isn't invested in a bunch of assets that we don't understand, but rather invested in things like physical gold, where we, the banker, actually controls the collateral. I'm feeling very feisty about this bank, Addison. If I remember back to Everbank, when we started the bank, we had 0 customers waiting to do business with us. The information request database at Battle Bank now exceeds 7,000 customers, most of whom were our customers at Everbank, know what to expect, and are eager to do business with us. So I'll tell you the other thing that really amuses me about Battle Bank is, if you will, the political correctness of American banking. One of the best lending businesses that I know, and a business that I've been involved in for most of my career, is oil and gas lending. It didn't occur to me at age 70 that I could get back into oil and gas banking, because I really, truly thought that by now, that would be the province. The senior secured production credit facility would be the province of the great big banks. But the great big banks have been swayed by the big thinkers, by the Bidens of the world. And despite the fact that the oil industry enjoys record cash flow, capital availability to the oil industry from the big banks is declining. I can win any race where I'm the only runner. And the fact that the biggest, most competitive banks in the world are exiting the oil and gas business and giving me the opportunity to re-enter a business that I've been in for 45 years is absolutely like a dream come true for me. Unlike our president, who believes that peak oil will occur in 2030 or 2032, I believe that peak oil demand will occur in 2060 and then taper off gradually for 40 years after that. And when I look at the oil and gas industry now, generating record free cash flows, but not investing as an industry sufficiently in sustaining capital to maintain production, I know that prices will be higher for longer. And I know too that there is a subset of producers who are investing sufficiently in sustaining capital to sustain these very, very, very high free cash flows. And I look forward to being a very competitive lender in that space.
So I do want to get into the banking situation, like in the mainstream world, because there's a crisis going on. But I'm curious to have your thoughts on how long the sustained political investment in alternative energies is going to last. I mean, you're gonna go long fossil fuels basically in an era where there's literally trillions of dollars flowing into the alternative space, mostly getting gobbled up by shady characters who operate in political circles. But what are your thoughts on like ESG and the move towards climate change initiatives in government? Because that's where the money is coming from.
If I get to define ESG, I'm all for it. I just don't like the way they define it. Let's look at the alternative energies first. I've been an investor occasionally in alternative energy, particularly where you have a government guaranteed fee structure. In other words, where the government guarantees that you're going to make money. That's not a bad deal. But in terms of it being a threat to fossil fuels, in the last 40 years, we've invested around the world almost $5 trillion in alternative energies. And that $5 trillion investment has reduced the market share of fossil fuels in energy production from 82% all the way down to 81%. A $5 trillion investment has reduced the market share of fossil fuels by 1%. Now, partially that's, of course, because the market for energy has been growing as the population of humans increase, and as the material well-being of all of mankind increases, demand for energy increases. Many of the big thinkers, Addison, I suspect our president among them, don't realize that 1 billion people on Earth have no access to electricity. 2 billion people on Earth have access to only intermittent or unaffordable electricity. And those people want to live materially the way that you and I do. So, is there a future in alternative energies? Absolutely. Oil and gas, that too. Coal, irrespective of Biden's preference? The answer is yes. Nuclear, yes. All forms of energy. And as a banker and as taxpayers, as consumers, we all need to understand that, irrespective of the wishes of the big thinkers. All forms of energy will continue to do well for a very long time. The ascent of humankind requires it.
How do you, when there's a political divide in the country and the lines are drawn fairly starkly from one side, I would say the progressives just want to shut down coal or whatever, right? How do you think about that? Like, put your banking hat on for a moment. Do you even care about that kind of stuff?
I do, but markets work. Markets are messy, but they work. As Germany has learned, you can't burn politics. You should burn politics, but you can't burn politics. You have a political consensus, or had a political consensus in Germany around green energy. And the consequence of that is that the nation favored solar in the far north where the sun doesn't shine. They shut down, among other things, their nuclear industry. And as a consequence of that, have had to resort to burning dirty brown lignite coal, blowing any chance they had of making their Kyoto Protocol pledges, while at the same time quintupling their energy prices. What happens there is that facts get in the way of the government narrative. We now have, as an example, the co-founder of Greenpeace saying that the only opportunity we have to reduce carbon emissions is nuclear energy. It's unusual for me to be on the same side of the page, obviously, as the founder of Greenpeace. But I think that over time, when need be, a fact-based world triumphs over a narrative-based world, certainly in the near term. Everything gets decided politically.
Yeah, Stuart Brand famously also said that he thought that nuclear was the future of green energy. And I've actually had that opinion, like privately, for probably 20 years. Like, it makes sense. If we can control the fission process, that's the only thing.
And Mr. Brand goes further than that. He says that the low-hanging fruit in carbon is to replace coal plants with natural gas plants. In other words, he's suggesting an increase in natural gas production and using the natural gas as a fossil fuel in the interim to back out coal production. Many of the big thinkers and many of the voters, frankly, don't understand that despite the big thinkers' aversion to coal, that the largest year in history in terms of coal demand worldwide was 2022. Thus far, coal shipments in 2023 are 4% higher than they were in 2022. So while the big thinkers are thinking, the billion people on Earth who have no access to electricity are acting, and coal demand is increasing. This isn't meant to be necessarily a defense of coal. It's simply to say that reality gets in the way of narrative, and reality ultimately triumphs, mostly.
I've had this question for a little bit, and I don't really understand it, but the political narrative is that we have to wean ourselves off of coal, natural gas, any kind of carbon burning product in order to produce energy. But at the same time, we, the United States, I say we because, I don't know, I loosely associate myself with the United States. Aren't we the largest producers of both coal and natural gas?
We are the largest producers of coal, but we are the largest producers of natural gas. And we're extremely efficient in natural gas production, not merely because of our geology, but for decades of investment in natural gas related infrastructure. We are superb producers of natural gas. I guess it runs in the way of the political narrative, in particular, the political narrative around some very big campaign contributors, the Tides Foundation, the Hewlett Foundation, that sort of confab of big thinkers revolving around the World Economic Forum are very much anti-fossil fuel. If you extend the fossil fuel discussion worldwide, however, there's a very different discussion. In the Western world, the control of carbon emission targets national quotas for fossil fuels. The Indonesians, the Chinese, the Indians, the Brazilians suggested a more equitable measure of carbon tariff would be on a per capita basis. In other words, that countries that generate a low amount of carbon utilization per capita don't have the same emissions reductions requirements that the big countries have. Further, those small countries suggest that the carbon problem, if there is one, relates as much to history as it does in the future, which is to say, most of the carbon that's been generated in the atmosphere in the last 100 years is still in the atmosphere. So people from emerging and frontier markets that had very low historic production of carbon suggest that they're due a credit for the level of carbon that's been emitted into the atmosphere by Western nations. And I suspect that they have a point on both counts. What that means is that for the big thinkers to actually equitably make the contributions that they're talking about requiring all of humankind to make, that the burden will fall disproportionately on the West and will in fact be unaffordable. The simple fact is that we aren't going to make the climate goals in 2050 without a radical improvement in technology. It's not going to happen. Remember the earlier statistic. We've now invested almost $5 trillion in alternative energies and reduced the market shares of fossil fuels from 82% to 81%. It isn't merely that we won't invest the money necessary. There isn't enough money to invest. to reduce carbon loadings to the point that they suggest will have to occur in 2050 without massive increases in technology around energy conservation, around nuclear power, and around the grid. You need to get the power from where it is to where it's used, and you need to make that power addressable. People need to be able to reduce their consumption or store power during times when energy is cheap and use that stored energy either to sell back into the market or to use themselves when power is expensive. All of that is going to require trillions of dollars of expense, and it isn't going to come out of a carbon budget.
Do you have an idea of the motives of, you mentioned the World Economic Forum, and you mentioned, the Biden administration is sort of rabid on this issue. Do you have an idea of the motives other than the profit motive? I mean, there's a lot of people getting grift from the system. We already know that, but like I can't put my finger on why, like, I can't imagine myself spending my career trying to convince people to do stupid things.
I have a suspicion, which is what I would describe as watermelons, which is to say green on the outside, but pink in the middle. I suspect that there is a class of big thinkers in the world who regard the rest of us as unnecessary burdens, at least taking our opinions and wants and needs into account. They regard us as unnecessary burdens. And to quote Rahm Emanuel, they never let a good crisis go to waste. These people have been around for a very, very, very long time. I remember in university that one of the big issues was, I'm not kidding, global cooling. The idea then was that particulate pollution was causing the rays of the sun to reflect back into space, and that the world was going to create a new ice age as a consequence of burning hydrocarbons. There was also, of course, the Great Club of Rome. You may be too young to remember that. But the Club of Rome, Paul Ehrlich, Jimmy Carter, his ilk, were the ideological predecessors to the World Economic Forum. And they held forth in the 1960s that by the year 2000, oil was going to be $250 a barrel. Copper was going to be 10 or 12 bucks a pound, and the 30 or 40 million people a year were going to be dying of starvation. In fact, by the year 2000, because of technology and markets, the largest public health challenge we had in the world, rather than starvation, was in fact obesity. I'm not defending obesity, but it's a choice. Starvation is not. The oil price, rather than being $250 a barrel, was $18 a barrel, and the copper price, rather than being 12 bucks, was at 80 cents. It's difficult to be as wrong as those people were and sticking to the same projection. And I can only think that the goal is control, that you have a green wash on top of a socialist pink interior.
I have a hard time buying all that. Like like it's hard enough to run a company. You and I have both run several companies ourselves, right? Mm-hmm. How do you control an entire population? You just
I don't know. I don't know, but I look at the continued failures. Let's look as an example at Mexico, at Pemex. How do you ruin an oil company and an economy in an area that has such a good labor force and such spectacular geology? It takes skill to do to the Mexican oil industry what Pemex has succeeded in doing in Mexico. It takes skill to wreck the oil industry in Venezuela. It is beyond me, really, to understand how the ideology and the narrative of government control and socialism is so strong, given the track record, which is virtually unblemished by success. I'm not saying necessarily that these people seek to control every aspect of your existence, but I certainly think that they seek to control your narrative. I certainly think that they would like to to decide in very broad terms how you travel if they get away with central bank digital currency. I guess that if they don't like the way you think and act, they can actually cancel your money if they want to. What their motivations are is beyond me. Certainly, Addison, were I elected to Congress, I would demand an immediate recount. I don't aspire to the role of big thinker myself.
Let's move on to the banking crisis itself. So
Right.
You're starting a bank amid the banking crisis of 2023.
You know, at heart,
In a way, I admire you for doing that, because you're taking the true alternative position there. The banks are all going out of business, and well, not all. That's an exaggeration, but there is a crisis that is taking a lot of regional banks that are even still healthy down in shareholder value, and we're approaching a point where the financial sector itself is about to drop below 2008 highs. And if you look at the chart, which I published in the Daily Missive, if you look at the chart, if it drops below that point, it could drop precipitously below what was the high in 2008. Like, the momentum would go the other direction. And you can't have a bull market in the broad stock market if you don't have financials on your side. So if financials are falling, we got a big problem.
Well,
and then you're starting a bank in the midst of that.
Yeah, because I'm a contrarian and because I've existed in the natural resources business, every time somebody else sees a problem, I see an opportunity. Where much of the financial community sees a bear market as a bad thing, I equate a bear market to a sale. And I like to buy goods on sale, particularly financial assets, where I'm a big consumer. I don't like physical goods, really, but I love financial goods. I see the opportunity to be part of my 7th de novo bank, which this will be, because banking's a very good business. I'm at heart a used money salesman. That's what I do for a living and what I am. My relationship with my existing banks, when I haven't been part of the control group in the investment banks, has been at best sullen, but often mutinous. 2 months ago, I walked into a branch in the little town where I live, and I won't name the bank because I still have a relationship with them. And the woman who ran the branch, very nice woman, very empathetic, but she didn't know very much about banking. When I asked her some questions about deposit products, because I'd sold some real estate, she pointed me to a white service phone, I guess connecting me to India, to somebody who did know something about the bank's products. And I learned that the bank had 14 savings products, 5 of which paid me no interest. Perhaps reciprocally, I had no interest in them. A bank that offers 1 savings product, not 14, that pays in the highest quartile of deposit interests, is much more interesting to me than 14 products that obfuscate the fact that at least 5 of them purport to pay me nothing. Banking is about blocking and tackling. It's about customer service. It is about designing deposit products that service the deposit community and lending products that are focused around core competencies of the team. And I'm going to suggest to you that banking in much of the United States has lost its direction. The idea that very large institutions can be expert enough in 300 industries that they can understand the value of their collateral seems impossible to me. Absolutely impossible to me. It took me 15 years to understand enough about the natural resources business that I could be a resource lender. Now, I'm perfectly willing to grant you that there are quite a number of bankers at the big banks who are smarter than me, but during the course of their career, they're switched around 7 or 8 industries. The idea that they can understand enough about the industry to be good bankers in those industries is absolutely a non-starter. So I think this is a perfect time to start a bank. I am, by contrast, very concerned, as I think you are, about the financial structure of the West banking industry. The Federal Reserve believes, as an example, that 7% equity slice is adequate, which is to say 7% of total assets ought to be reflected by equity. So they suggest that a well-capitalized bank is leveraged 11-1. What you become as a depositor then is an unsecured creditor of a regulated hedge fund, which is not my idea of a good time. The second thing that the regulators have decided is that assets that are held for sale don't need to be marked to market. So a bank, if they hold, let's say a Eurozone bank that holds a Greek government bond where the interest is denominated in euros, is allowed to hold that bond on their books at par, even though the bond is trading at the market at 60. This is legislated fraud. Silicon Valley Bank had mark-to-market losses in their 5 to 6 year bond portfolio that exceeded the capitalization of the bank. But they weren't required to disclose that because the bank said that these were going to be held to maturity assets. What happened, of course, is when these mark-to-market losses became known to the public, the bank experienced disintermediation, which is to say the depositors left, and the banks couldn't hold those assets to maturity. They had to sell them to pay out the depositors. And that's the next risk. The idea that you lend long and borrow short exposes you to undue swings in the cost of capital. At Silicon Valley Bank, had they been able to maintain deposits that paid the same deposit interest rates as they experienced 30 months ago, would have been fine. But the income stream that they got on their long-dated assets stayed the same, while the cost of funding those assets tripled. And that finished off Silicon Valley Bank. And
yeah, I'm curious about. I don't mean to interrupt
Yep.
you. But I'm curious at like they're running a bank. They ought to know that. Like, how did they have it?
I've asked myself that question many times. I suspect, Addison, that despite some hiccups like 2008, that the last 40 years have been the most benign economic climate in the history of humankind. Consistently falling interest rates, the benefit of very good demographics. I don't want to sound too woke or politically correct, but inclusion, the inclusion of more women in the workforce, increased globalization, the ascent of China, wonderful circumstances. For a long time, the decline of geopolitics. I would suggest to you that that era is over, that the demographic boom is beginning to bust, that economic nationalism is replacing true globalization, that inclusion is no longer about competent people being allowed to assume roles in society, but rather that favored groups that organize themselves around voting blocks, have a call on society's resources. I think things have changed, and I think bankers weren't prepared for the change. I think that bankers banked, many bankers banked, and most politicians banked on a continuation of the benign climate that existed from 1982 to 2022. And I don't think that they realized the extent to which things had changed. I don't think that they realized either, and I'm not sure why, that the change in interest rates was necessitated by the bankruptcy, not the bankruptcy, that's too strong a phrase, by the debasement of the US dollar, by creating 7 trillion currency units through quantitative easing, which if you and I did it would be called counterfeiting. I don't think that bankers, the bullish bankers at least, paid sufficient understanding to $32 trillion in on-balance sheet liabilities and $100 trillion in net present value of off-balance sheet liabilities in the United States. I don't think they paid attention to the fact that you don't service $100 trillion debt with a deficit, with a budget that's in deficit $2 trillion a year. In other words, the excess sins of society over 40 years had to be dealt with. And one way that you have to deal with that is that either you allow interest rates to rise or you lose control of interest rates altogether. And the increasing sense that we've had to pay the piper over 18 months, the fact that interest rates had to rise was something that absolutely upset the apple cart of those institutions who didn't think that interest rates had to go up.
If you could look forward, like say 6 to 9 months, or maybe even 18 months, how many more banks are in that boat?
I have read, although that I don't know, that there that about half the banking industry has mark-to-market losses that exceed their tangible book. Maybe not their total book, because they have intangibles in the book. Now, I suspect the Fed will manage to paper that over. I suspect that what you will have are some crises of confidence. But I've learned from watching investors and savers and speculators that dealing with risk, dealing with the unknowable, is so painful that most people put it off. Most people would prefer to be mollified by the blandishments of the big thinkers rather than do the arithmetic around mark-to-market losses and what that might do to the institution. People say, well, the FDIC backs me up. The FDIC, the assets of the FDIC insurance program are dwarfed by the liabilities of the American banking system that the FDIC is meant to insure. Now, make no mistake, I think we're going to get through this. I think it's the way they once described George Foreman's punch, which is to say severe, but survivable. I'm not looking forward to taking the punch, mind you, but I do think we'll get through it. I just think that the fact that I think something isn't an adequate defense. I think that your listeners need to pay less attention to the FDIC and more attention to the statement of financial condition, which your bank must provide you if you ask for it. The best way to guard against bank insolvencies is don't deposit money with a bank that's stupid enough that's going to become insolvent. The idea that you trust your financial future to an insolvent institution regulated by an idiotic government is not a good thing to do with your money.
Yeah.
You know,
what do you think of the whole too big to fail? Like we just published some reports that comes directly from the Office of Financial Research from the Treasury Department, which they published this thing called the Contagion Index. And among the top 10 banks are like JP Morgan Chase, Bank of America. I think Providence Bank is in there. There's like some massive banks that literally, if they went under, it would take down the entire financial system.
Yes, sir. Absolutely, positively. And I don't understand why the big banks aren't using their current advantage to be intelligent. The idea that trillions of dollars are coming into these banks and their response is to lower their interest rates is idiotic. If they were paying 4% and then reinvesting the money in overnight repos with the US government,
that would be
at 5.15, you'd make 100 basis points for doing nothing. The idea that they have to maximize the benefits by screwing their depositors, I don't know what it says about them. I mean, I really don't know what it says about them, but it tells me it's a wonderful time to start a bank. And by the way, those listeners of yours who are investors can look through the wreckage, not so much of the regional banks, but the community banks, the smaller banks. You can find banks that are extremely well run, that earn consistent 15% returns on equity, that are selling in today's market for half of tangible book. Banks that have equity as a percentage of total assets that exceed 15%. And even with that high equity, in other words, even with diminished leverage, generate 15% returns on equity. and you buy them at half of tangible book. Were I a very young man, I might even have walked away from natural resources had I come into an environment where the best business that I know of, which is banking, offered me up opportunities to earn a 15% return on equity at half of equity. That's in effect a 30% earnings yield on a business that's basically being a used money salesman. A wonderful, wonderful, wonderful business.
What, like, generally, if you're looking for yard sale prices, you want to find the bottom. Like, how do you judge where we are in the crisis?
I used to want to do that, Addison, but I know myself, I'm flawed. And if I miss the bottom, I usually don't buy in on the way up. So I have to anticipate the bottom. And the second thing is a wonderful quote from Bernard Baruch. You'll like this one. Bernard Baruch said, the only guy who ever bought stocks at the bottom and sold at the top was a liar. It didn't happen. Sometimes things have to be cheap enough. Buffett has famously said that. He said that, price becomes irrelevant to him if he believes he's getting a good deal. A good deal to him is buying a share for a price that he would buy every share in the company for, if he could, and have the stock cease trading. In other words, it isn't the price of the stock, it's the relationship between price and value that matters to him. He also says that he wants a company that he knows well enough that if the share price fell 25% from the price that he paid for it, he would be happy. So he could apply the same intellectual capital to increasing his position at a better price. Those are psychologically very tough parameters. I began employing them myself about 30 years ago, and they've materially improved my performance as a director. Now, I need to tell you, Addison, that I've tested Buffett's maxim about buying stocks and seeing them go down dozens of times in my career. And while it hasn't been pleasant at the time, it's usually worked out for me over time. So I'm beginning to deploy in community banks now. And the fact that I'm beginning to deploy in them almost certainly guarantees that they're going to go lower, because I'm looking at absolute values, not narrative values. And bank investors, particularly ETF investors, don't look at banks. They look at banking. They, in movie parlance, don't discriminate between the good, the bad, and the ugly. And I am able to do that in a circumstance where the whole sector goes down lower. The good ones go down too, but they come back quicker and they recover further. If you're a contrarian, the fact that nobody likes a sector is a good thing for you. Buffett again, buy straw hats in winter. Right now, we're in banking's winter.
So how do you, like, if, let's say you buy a bank, community bank, and it goes down 25%.
Yep.
How do you, like, what do you do? Take some Maalox or something?
I don't anymore. I mean, now the truth is, without bragging, if one of my positions is down by 25%, it doesn't change my decision as to what to have for breakfast. I don't bet money that I can't afford to lose. But if you understand the discrepancy between price and value, which is to say that you think that the price understates the value, and the price falls further, if you have the ability to buy more, that's precisely what you do. That isn't what keeps me up at night. What keeps me up at night is what Congress and the legislature prepares to do to the wealth I've already made and the wealth that I might make in the future. The idea that the biggest risk that confronts me is that I might buy a bank stock that falls by 25% in price, and I'm supposed to worry about that as opposed to what Congress might do with regard to regulation or taxation. I worry about real threats, not supposed threats.
Yeah. So that's a good segue opportunity. I wanted to get your thoughts on the debt default debate in Congress. As we're speaking right now, Joe Biden and I guess President Biden, excuse me, and Kevin McCarthy, the Speaker of the House, have met. I think they met yesterday or the day before, and they ended up agreeing that they don't want a short-term solution for the debt default debate. And we're like in the middle of May, and it's only a couple of weeks away. Like, this was
by the debt default
theater, right?
By the debt default, you're talking about the debt ceiling?
Yes.
It's interesting that neither side cares much about spending or the debt. They both care about the ceiling. This is political.
Yeah, it's theater.
It is completely theater. I have never in my life witnessed a Republican administration, by the way, that cut government expenditures. President Reagan restrained the growth of the expenditures, but he actually increased the deficit because he cut taxes. So while the Republicans purport to be the party of small government, history has proven that that's not true. They just spend on their priorities rather than the Democrats' priorities. I guess the theater that you described, which is to focus the victims, I mean the taxpayers' attention on the debt ceiling, as opposed to focusing their attention on the debt, serves their political ends. But I think it's wholly theater. I noticed too that the description of the debt ceiling does not include the rise in unfunded net present value of liabilities, Social Security, Medicare, Medicaid, military and government pensions. When they discuss the debt ceiling, they're talking about the on-balance sheet liabilities of the US government. One of these actually proposed, maybe it was an academic, proposed to mint $1 trillion coin, $1 trillion face value coin, and contribute that to the federal government to ostensibly reduce the debt by $1 trillion. The problem is that only that would believe that $1 trillion coin was worth $1 trillion. If you took it out of the government and tried to spend it, you'd be thrown in prison for fraud. This is the level of debate that we're subjected to. This is what NBC and CBS and the New York Times believe is news. This isn't news. This is theater. The fact that the cost to service the national debt has doubled is news. The fact that we propose to service $100 trillion deficit, $100 trillion in debt, with a budget that's in deficit $2 trillion a year, that's news. The fact that we contributed $200 billion to bail out the banking system without increasing taxes or borrowing. In other words, we counterfeited that $200 billion. That's news. This drama over the debt ceiling is, as you so well described it, theater. And it'll be resolved, by the way. It will be resolved. What the near-term fix will likely be, if there is one, is counterfeiting. There's no constituency to reduce spending. There's no constituency to raise tax. There's a huge constituency for fraud.
Yeah. Well, so part of the reason for that, though, is that the people who pay the taxes, you and me included, a large part of the people that are going along with the, what do we call it, the mainstream narrative, the political narrative, aren't aware of the things that you and I are talking about right now.
Which is precisely why these conversations are valuable. The only way that I know of that I can do my own small piece to change public opinion is simply to talk arithmetic. I don't know. I'm not running for office, believe me. So the only way that I can think of that you change things is that you cause enough people to look at these issues through the prism of their own self-interest and the interest that they have in their children's and grandchildren's future and begin to act. I'm not, by the way, arguing with you that 40 years of artificially low interest rates haven't been good for me personally. I'm financially sophisticated. I have access to credit. And the fact that they provided that credit to me for interest rates that were substantially below the interest rates that would exist in a free market means that while at the same time they were stealing from me via taxation, they were subsidizing me by by reducing my cost of capital. I get that I'm a beneficiary of this insane system. But I'm, frankly nervous about the legacy that we leave, you and I leave, to people who are younger than us and less fortunate than us. That's problematic for me.
Yeah. You were talking about Buffett earlier. He also said, hey, these are he pays less tax than his secretary. That's kind of like a meme that got passed around on the internet.
It isn't true, by the way, but that's a different
It's
question.
not true, but that was a meme. And he's like, he defended himself by saying that I don't make the tax laws. Congress does that. If you want me to pay more taxes, Congress has to change the tax law. Like, don't give me so many loopholes.
Buffett's really good at talking his book. If you look at Berkshire Hathaway, what you'll learn is that Berkshire Hathaway is pretty good at a couple things. One is depreciation. One of the reasons that Berkshire Hathaway has to spend so little in tax is because they don't pay dividends, that they reinvest that free cash flow in the business, and they generate depreciation charges. But the second is much more ingenious. Berkshire Hathaway operates as a reinsurance company. The regulators want well-capitalized insurance companies. And the consequence of that is that Berkshire Hathaway and other people in the insurance business, myself included, are allowed to set policy loss reserves based on estimates of future liability. So if Buffett writes a $1 billion reinsurance policy with a nominal 15-year term, he can set up reserves for policy loss at whatever level he deems prudent. So he writes a $1 billion policy with $20 million a year in premium, and he establishes a reserve for policy loss of $150 million, or 5.5 times his earnings off that policy the first year. And he uses that policy loss reserve to shelter his income from the Burlington Northern Railroad or Pacific Corp Utilities. What that means is that Mr. Buffett, who says that you and I should pay more taxes, is taxed at an effective tax rate of 11% because of his intelligent use of policy loss reserves. I haven't looked at this for a long time, but when I used to look at Berkshire Hathaway, very often the creation of reserves on their books exceeded the realization of reserves in that year 5 or 6 to 1. Now, this receipt of premium in excess of policies paid is what Buffett calls float. Float is also a tax liability that is put off by Buffett ad infinitum. That number on the Berkshire Hathaway balance sheet now exceeds $200 billion. It's a wonderful source of capital. It is equity that isn't equity. It's debt that isn't debt. It is really tax liabilities that they'll never have to pay as a consequence of setting up policy loss reserves. As large as your insurance, as long as your insurance business grows, you can continue to increase these reserves in excess of policy premiums. So as Mr. Buffett says, he didn't make the laws, he's using them, and he's using them extremely well.
Yeah, as he has.
As he has.
So we have this, we have the debt ceiling debate going on. We have a banking crisis, and we have the Fed, at least publicly, trying to battle inflation. And then this week, we got news from the IMF that they're projecting a slowing of global growth in the Western economies, and then increased growth in China and India. That was the sort of summation of the report that they released this year. I assume that the bulk of the growth in China and India, if you use them as a proxy for the emerging economies, is going to be in the resource sector. And in the West, we have a banking crisis, and we have an over-indebted consumer culture. So that's the projection for slowing growth in the West. How do you, like, as an investor, do you even care what the IMF says?
I normally don't care what the IMF says because I've learned that my ability to analyze balance sheets and income statements is more germane to my financial future than the big picture narrative. And the IMF deals in big picture narrative. I sort of agree with the IMF, although I'm concerned about the opacity of the Chinese banking system. When we talk about ourselves as being over-indebted, they may be, but we don't know, and I don't think they know either. Certainly, the Chinese government has prioritized savings and investment over consumption. And that's the way you grow an economy. You don't grow an economy by over-consuming. You grow an economy by increasing your productive capacity, which we have not done, and they have done. I am a believer in the ascent of humankind. I am a believer that the world is slowly getting better. I have watched myself over the last 40 years, traveling to frontier market economies, looking at mines and oil fields, that the material lot of the poorest of the poor over the last 40 years has increased, and it's increased dramatically, and this is a good thing. And I think that the China rising story that you saw in the 2000 to 2012 timeframe is beginning to be replayed around the world in a whole bunch of places. And I think that's all good. I sort of agree that growth will increase the best in economies that are under-indebted. They're under-indebted not because they were well-disciplined. They were under-indebted because nobody was dumb enough to lend to them. But the consequence of that is that they have less challenges to growth at the same time that they have better demographics. I agree with you, too, that an increase in growth rates in places like China and India, and the proxy Chinas in India's, is good for resources. When poorer people have increased spending power, the stuff that they spend their money on is materially intense. Addison, when you get more money, you buy a service, or you may buy some little gizmo from Apple, where all of the price is intellectual capital, but there's no stuff in it. When a poor person in India gets more money, he or she replaces a thatch hut with cinder blocks. They replace a thatch roof with steel. Their mode of transportation goes from barefoot to tennis shoes to a 50cc motorcycle. Their lifestyle is much more materially intense than yours and mine. They aspire to the same material standard of living that you and I have, which is materially and energy dense. And an increase in purchasing power in frontier and emerging markets means that 3 billion people who want to compete with you for material goods and services are increasingly going to be able to, which from the point of view of a commodity producer like me is a good thing. From the point of view of a commodity consumer, probably a less good thing.
Let's actually pivot to that. You're an investor in mining and production of energy as well. And you have been for what, 4 decades?
Yes, sir.
For a long time.
Yes, sir, a long time.
I mean, I've known you for 30 years. So
yep.
How do you think about the if there's a crisis in the banking sector, financials, and it Contagion works its way into the broader market? How do you think about like the price of gold or just energy in general? How do you process crisis in one sector and opportunity in another?
To answer the question, I think you need to bifurcate precious metals and other industrial materials. If the policy response to a recession is the same as the policy response to every recession in my lifetime, which is to say counterfeiting, then I think the gold price does extremely well. If the Fed backs off interest rates, if they artificially lower interest rates, or if they go to another aggressive bout of quantitative easing, if they further debase the currency and further reduce the spending power of American savers, they're going to do spectacular things to my gold portfolio. On the other hand, I'm sorry.
Wait, before you continue, I just want to stop you there because there is also this theory that through the futures market, the gold price is controlled. That's why it's having trouble getting over $2,000.
I believe that there is the opportunity to control the gold price, but I've seen no evidence other than spoofing, which is to say short-term manipulation of the gold price, that's occurred. And I would caution anybody who tried to do that in the futures market, that with the futures market frequently trading 100 times the inventory available for good delivery in a day, that the short squeeze of all short squeezes could occur if somebody actually tried to rig the forward market in gold and silver. I believe that markets are always bigger than manipulators. Listen, I grew up on the Vancouver Stock Exchange. I had a firsthand view of manipulation. And I can tell you that there's no such thing as long-term manipulation because the manipulators turn on each other and it requires more competence than they have. So I'm less excited about that. I don't think that for the last 40 years they've had to manipulate the price of gold down because the price of gold was falling due to the strength in the US economy. Why would you waste billions or trillions of dollars doing something that you couldn't do anyway, that you didn't have to do to begin with, because the price of gold was falling of its own volition? In the 1970s, the price of gold was very often manipulated in financial markets up, because that was the easiest way for the trading desks to manipulate it. The easiest way for the trading desks in the near term to manipulate the price of gold and silver for the last 40 years has been down. So that's what they did. They rigged every market. They rigged the LIBOR market. They rigged the US Treasury market. They didn't rig it for the long term. They rigged it for short-term trading gains. And that's going to happen as long as there are markets. But I suspect that the markets are much bigger than the regulators and much bigger than the manipulators over time. If you segregate out gold from other industrial materials, if as a consequence of rising interest rates and the banking contagion, or some black swan, we have a global synchronized recession, or worse, a depression, that's going to wreck a lot of my commodity thesis. My commodity thesis is based on the fact that we've had 3 decades of underinvestment in resources. And while demand has grown, supply is falling. And so prices are high. But you can take supply down if you take demand down and you don't raise prices. So if you're somebody who believes that we're on the precipice of a real recession, or worse yet, a depression, you probably want to forestall investments into things like copper and nickel and oil and gas, the stuff of humankind. If you're investing on the material well-being of humanity and you don't think that's going to continue, you need to be very careful around not just your natural resource investments, but frankly, all of your investments.
But it sounds like you don't support that thesis.
I think we may very well have an economic slowdown. I continue to be of the belief that the advancement of humankind, mostly in frontier and emerging markets, but even in the US, is such that we'll survive a recession if we have it. We still have a society, even in the US, as sclerotic as we've become, where 6 young kids can commandeer a garage in Sunnyvale and out pops Google. I continue to believe that our individual initiative and genius is probably sufficient to fund our collective stupidity. I don't want to test it, but I believe that the impending production shortfalls in the stuff of mankind, in agricultural minerals, in energy transition materials like copper and cobalt, and in conventional energy like oil and gas, I think that the conjunction of political processes which make investing in that sector unpalatable for some, and a historic underinvestment means that within the 5-year time frame, based on current production levels, not the production levels I see 5 years from now, but current production levels, means that we're going to have supply shortfalls. That could be delayed by a recession. In other words, that which is inevitable isn't necessarily imminent. And I've certainly been early before. And investors in the industrial materials thesis and the ascent of humankind thesis definitely need to take into account the time value of money threat offered up by recession. People do need to consider it, and I consider it.
in the popular sense, why are we so afraid of a recession? In the Austrian theory, a recession is a good thing because it wipes out all the bad mistakes that happened during the boom.
I think people want other folks to have a recession, but not to have one themselves, which is, probably an unrealistic.
There's a famous joke. Recession is when your neighbor loses their job. A depression is when you lose yours.
Correct.
It's a psychological event.
A lot of it is psychological. Some of it's real. Doug Casey points out that in a bear market, assets don't disappear. They change hands. They go from the unworthy to the worthy. The unworthy don't like that so much. The worthy, of course, like it more. People have a philosophical aversion to bear markets. I don't. I think that bear markets are sales. The idea that the average consumer does more consumer research on a $400 coat than they do $100,000 worth of stock has always amused me. And the idea that investors, as a consequence of their familiarity with consumer goods, like it when the price of consumer goods fall, but hates it when the prices of financial assets fall, despite the fact that we're consumers of financial assets, has always struck me as odd. Even at age 70, I'm trying to increase my wealth. If you follow the precept that you do that by buying low and selling high, the opportunity to buy low is something that you should relish. But few people do.
Yeah. I'm glad you brought up Doug Casey because I wanted to ask you a question. We grew up in this industry and we're alternative thinkers, we're contrarians, as you say. And Doug is certainly one of those. Jim Davidson's another one. I'm thinking specifically of international man, like this idea that you can live in a 5-flag environment, which we can talk about in a second. And then also with Jim Davidson is the idea that technology would allow people to become sovereign individuals. What happened to that thread of ideas? I am a generation behind you. And I was enamored by it as I got into the industry 30 years ago. And it seems like it just kind of disappeared. Like, where did it go?
I sought to be an international man, and I found I was too lazy. Doug Casey's idea that your assets and your passport should have 3 different domiciles appeals to me. I used to have my assets in 11 or 12 domiciles. And Addison, it was just damn hard.
A lot of work.
The other thing I found is that culturally I was American. And when I lived in other countries, and particularly New Zealand, while I liked the people there, I found I was more comfortable in this community. So internationalizing to the extent that Doug Casey has, living in Uruguay, particularly if you're Doug Casey, you live in Uruguay, you don't speak Spanish, just doesn't have very much appeal to me. I do have a second passport, which I have the same way other people have insurance. I hope it never comes in handy. I hope when I shed my mortal coil that my heirs, successors, and assigns say that the money that Rick spent on that second passport was money that was totally wasted. That means that I never experience a crisis of the type that compels me to use it. I also, I think I believe, although I'm not smart enough to activate it, that Davidson's thesis with regards to technologically competent individuals being able to shed their national coil and exist as some sort of avatar exists. It's just that I'm not that smart. I still have a tough time downloading some apps on my cell phone. And the idea that I'm going to evade the NSA and the whole technical apparatus of the state is a non-starter. It isn't that the technology is bad, it's just that they're better at using it than I am. If you were a real believer in my social and political theology, and you regarded taxes as coercion and theft, the logical conclusion of that is that you refuse to pay tax. If I refuse to pay tax, they send me 2 or 3 nasty letters, and then some big guys in blue uniforms with guns come to my house. And you know what, Addison? They shoot better than I do. And so I'll admit it. In terms of the actions that would constitute a moral response, I'm a coward. Old, fat, rich, bald, white, coward.
You nailed it. Yeah, hard as it is to admit, right?
I like to shoot, but they're better at it than I am. So,
yeah. All right, let's talk again about the conference, because I'm going to be there. And
I am so excited that you're coming, Addison. That's that's wonderful.
Yeah, I was off the grid for probably 10 years because I had some domestic things that I had to take care of and stuff. But I'm excited to get back out there.
We've come full circle. You get to work at my conference. I worked at your conference for a long time. By the way, I enjoyed the hell out of it. So let's talk about the conference. July 24th through 28th, Boca Raton, Florida. Get there a day early and have some fun.
Hold on, I just looked it up. It's the 23rd through the 27th.
Yeah, see? You were better at running conferences than me. Okay, 23rd to 27th. Boca Resort.
Of July. We should mention that.
July. Boca Resort, for those who haven't seen it, is spectacular. Michael Dell's got $1.4 billion in it. About half a mile of Atlantic Ocean waterfront, 245 acres in Boca Raton. Right now, if you booked a room there in the tower, it'd cost you $1,100 a night. We booked a lot of them, so you get it for $300 a night. But you don't come just because of the great resort. You come because this is a conference that's got 20-something years of history between your time and mine. A conference is just about natural resources. We don't try and talk about everything. A conference that, as we say, has just these wonderful range of macro thinkers, the Bill Bonners of the world, the Nomi Prinz of the world, the Jim Rickards of the world. We have wonderful analysts. We have exhibitors, as I said earlier, that have actually been vetted. They're not merely advertisers. At most conferences, the qualification to be an exhibitor is a pulse and a check that cashes in reverse order of importance. We vetted ours. And of course, it comes with an absolute ironclad money-back guarantee, whether you come to the conference in person to Boca Raton or you watch it live stream in the comfort of your home. Your tuition, if you don't think you got your money's back, your money's worth, will be absolutely, unequivocally, fully refunded. If you do attend the conference, either live or virtually, you'll have the ability to replay the conference tapes as often as you need for the next 6 months. So it's difficult for me to understand why somebody who was a natural resource investor in particular wouldn't come to the conference. There's no financial risk. The conference format has been in place for a very long time. We're time tested. The franchise has delivered again and again and again. We have the best lineup of speakers that we've ever had. So I'm really looking forward to seeing you there. We do something that you didn't do in Vancouver. We instituted a boat cruise in Vancouver Harbor. At first for attendees, and then the exhibitor said, why can't we come? So we now do 2 boat cruises. We can't do a boat cruise in Vancouver Harbor, but we do it on the Intercoastal Canal at night. And the ability to have everybody let their hair down, to speak to the speakers while they're relaxing on a boat, sipping their favorite beverage, has become an important added advantage to the conference. And I encourage you, Addison, and your listeners to attend both the conferences and the optional evening activities, which are great.
All right, great. As you know, I'm going to be writing about this for the next week. So I'm going to invite people to join the conference in Boca Raton.
Spectacular. I look forward to visiting you in Boca Raton. And turnabout is fair play. When I get back from Indonesia, what I'd like you to do is have you on my program where you can talk about your new book.
Oh, great. That sounds good.
That'll be fun. Yeah, that'll be fun.
Now I'll just take a moment to show what the new book is.
As you should. We'll turn the tables.
Yeah. All right, great. Rick, it's really good to catch up with you. We'll be talking, and I'll see you in July.
Always a pleasure.
I actually have a question about this. July in Boca Raton. It's in Florida.
We had the conference in
Exactly,
Vancouver.
Vancouver in July.
We had the conference in Vancouver for years in July because it's the best time to be in Vancouver in July. Then COVID happened. And the Canadian government's policy response to COVID, particularly the ArriveCan app, was such that with the attendees that you know so well, there would have been a plethora of border incidents with Americans trying to get into Canada. So we had the conference in the United States. Now, I'm not a huge fan of South Florida in July, but I can tell you this, attendee diligence has increased. You'll remember in Vancouver midday in July, many people would play hooky from the conference and go out on Robson Street, drink beer in the patios and watch pretty girls go by. Nobody in their right mind does that in July midday.
No.
The evenings are nice, but in truth, we have a much more applied conference than we used to.
Yeah, captive audience then.
Yep.
All right, great. I can't wait.
Looking forward to it, sir.